Most people are unsure where to start planning when they receive restricted stock units, and this can create a big tax surprise. So, to help you understand the tax impact, I'm going to cover an example that I go through with my clients to help them avoid any of these tax surprises from RSU. Now, first of all, when restricted stock units vest, they are taxed as ordinary income in the year that they vest. Because RSUs are considered supplemental wages, your employer is generally going to withhold 22% for federal taxes. And for supplemental income above 1 million, that moves to 37% withholding for federal taxes. But how can all this create a tax surprise? Let's start with that baseline example of a household that earns $500,000 in salaries. We can see that once this income runs through the federal tax brackets, we're going to project a tax liability of just over $108,000. But then we need to factor in how much they're expected to withhold from their paychecks throughout the year. When we calculate that, we see that $110,000 is expected to be withheld. So if they were to file taxes today, we can see that they could expect a tax refund of about $1,700, which is not bad at all. But what happens when we factor in restricted stock units that are going to vest this year? In addition to our salary we just looked at, let's now add $300,000 of restricted stock units that vest this year, bringing the total income up to $800,000. As that income runs through the federal tax brackets, we can see that the tax bill now is increased to about $216,000. The $300,000 of vested RSUs has added about $108,000 of tax. But next we need to factor in the withholding, and that means about $66,000 in additional withholding. So that brings the withholding to about $176,000. So with a total tax liability of $216,000, this creates an additional tax bill or unaccounted for tax bill. In this case, the federal withholding of 22% was not enough to cover the tax liability. And that's simply because with the salaries, these taxpayers were already in the 32% bracket. The RSU income pushed them into the 35% bracket. So it was taxed at a 32 and 35% rate, but only withheld at 22. So this is something you need to be working with on an annual basis with your financial planner and financial team to make sure you avoid any tax surprises and you can be prepared well in advance.